Welcome to Resilience and Resolve with Lance Drury.
Welcome to today's episode of Resilience and Resolve with Lance Drury, where we break down the complexities of the tax world, making it easier for you to navigate through the numbers and paperwork. I'm your host, Kevin Rosenquist, and today we are going to talk about business resolutions in tax troubles. Hey, Lance, how you doing, buddy?
I'm doing great. How are you, Kevin?
I can't complain. Excited to chat with you again. So let's start with the most common tax issues businesses face that might require resolution.
Well, the things we get a lot of small businesses, those are the people that generally get in trouble. 70% or more of our clients are small businesses. And there's a variety of reasons for that. One, those people are very good at what they do, but they don't know how to run the business side of things. There's a lot of regulation. There's a lot of red tape. Nobody takes the time to teach them all that. You have to learn that on your own. They get home at 7 or 8 o'clock at night, and the last thing they want to do is paperwork.
Sure.
The other problem that they have, though, is, and this happens a lot, is that somebody doesn't pay them. And so in order to meet payroll, they pay their customers, they pay their employees. They don't pay Uncle Sam in order to keep the business running. And then it just kind of snowballs. And then there's bad economic times. They have problems as well, because when the economy's not good, small businesses get hurt. And so those are the types of problems that small businesses run into. But the biggest mistake that small business people make, they try to do this on their own. And so I just want this out here for any small business person who thinks they can do this on their own. Remember this: do not call the IRS up and get a deal. Make your estimated tax payments first, because what happens when those people set up that agreement, the IRS is always going to make it for the full amount. And then guess what? There's no money left over to make the estimated tax payments. So the liability just spirals out of control. It pyramids, and then they have more liability and they never get out of that hole. So you want to make the estimated tax payments first, because not only will that make sure that you're compliant moving forward and you stop the hemorrhaging, but you can also get a better deal from Uncle Sam on the back taxes, because making those estimated tax payments is an allowable expense in determining your ability to pay. So if you're making $1,000 a month in estimated tax payments, that's $1,000 less a month you have to pay on the back taxes.
Oh, that's good advice. So what are the warning signs a business should be looking for that might mean they're in some serious trouble and could potentially need to call Lance?
Well, if they're not making their tax payments, that's the first sign. If they can't make their tax payments when they're due, it's just like any other creditor. You're not a viable business. And if you keep pyramiding tax liability, particularly payroll tax liability, the IRS is just going to shut you down. That's probably their highest priority, because the problem is not only are they not getting the tax payments from the proprietor, the sole proprietor, or the corporation or whatever, they're also losing out on what's reported by the employee, because the employee is going to report all that and they're not getting that money either. Mm-hmm. So they lose it twice. So their highest priority is payroll tax. And then what else can happen with payroll tax is that if you're a corporation, they're going to go after the corporation. But if the corporation can't pay the tax, then they're going to come after you personally for the portion of the payroll tax that's attributable to the employee. That's the trust fund recovery penalty. That's 50 to 60% of the total payroll tax. And the significance of that now is that they're coming after your personal assets and your personal income. Mm-hmm. So, now they're relegated. You're in trouble on the personal end as well. So that's why, you should reach out to a tax practitioner as soon as you see that you're not having the ability to make your tax payments to Uncle Sam.
How do tax liens or levies impact business?
Well, tax liens probably affect businesses more than the average individual, because sometimes if people, and that's a matter of public record, it's filed with the recorder of deeds in the county in which you live or the business resides. And if people see that, they don't often want to have to do business with you. They don't want to bring their business to you. Now, on levies, it's similar to an individual. An individual can have 90% of his paycheck taken, 100% of his bank account can get wiped out. But the other thing is if they get that tax levy, then they're going to intercept what's owed to them, and then they're probably not going to want to do business with you again either. So either one of those is not good news for a business.
Sounds like it. How can unresolved tax issues affect a business's day-to-day operations?
It's going to put a pinch on the company. I mean, it means the business isn't viable if you can't pay all your creditors. There's going to come a time when you're going to have to face the piper.
Yeah.
So it has a great impact on the business, just like not paying any other creditor. You got to get that resolved, or the business is not going to be profitable. And if that continues for any length of time, they're not going to be operational.
Yeah. And do you find what you were saying before, that most people, when they start to get into some financial trouble, most businesses, Uncle Sam, as you said, will be the last one they're paying a lot of times?
Yes, because they want to keep the business going. So they pay their suppliers, they pay their employees, and they think they'll catch up with Uncle Sam next quarter or whatever. So Uncle Sam's usually the one who is left out when the company is having financial trouble because they want to keep the business going.
And then that's when things snowball, and then that's when people get into trouble.
Right. That's exactly right.
Right. That makes sense. What about potential long-term consequences when a business keeps kicking that can down the road?
Well, the IRS is going to come and shut them down, because the IRS does not want somebody say, it's very easy to owe six figures in payroll taxes. Well, the IRS doesn't want that to become 200,000 or 300,000 or 400,000. So if they're not doing that, it's probably one of their highest priorities. That business is either going to have to get compliant, or they're going to want to shut it down, because they don't want them to continue to incur tax liability.
And what in compliant is, obviously one part of compliance would be pay your taxes, but are there other places, are there other versions of compliance that would satisfy the IRS?
You have to pay on time, and you have to file on time. That's the other problem, is that a lot of people, they know that they can't pay the taxes, so they make the mistake of not filing, particularly with individuals, because what happens is there's a 25% failure to file penalty after 5 months. It's 5% a month for the first 5 months. So for not filing, it's a huge mistake, because they're now adding 25% just to the raw tax, and that's before the failure to pay penalty and before interest. Mm-hmm. So it's a big mistake not to file the tax return just because you can't pay it.
So if I close my eyes, if I can't see it, it's not there, right?
That's how it works. A lot of times people stick their heads in the sand, and then eventually Uncle Sam's going to catch up with you. It's only a matter of time.
And so what options are available that you help businesses with? So a business comes to you, they're in a jam, they are not paying their taxes, they're in some trouble. What do you do for them to help them resolve their tax issues?
Well, I can give you an example. We had a firm out of Illinois, and they had a company out of Colorado for a year, paid them $30,000. They owed $1 million or more. And that company in Colorado dropped the ball. They would call them at the last minute for financial information. And then finally, out of the blue, they get levied. And one of them was $1 million levy. So they come into my office that afternoon. So, I told them, I can't guarantee you we can get the levy lifted. Well, we've had a lot of good luck. So the next morning, before 8 o'clock, they had hired us. By that afternoon, we had had both levies lifted. We had also, because there was a revenue officer, normally these things take 9 months to a year. But when you have a revenue officer, they don't want those files in their inventory. They want information. They want it now. They want to close the case out. Within a month, we had them set up on 2 installment agreements. They were ecstatic with the result that they got. And of course, they had to pay us more than what they paid the firm in Colorado. But they were glad that they did, and they're not paying anywhere close to $1 million back on that debt under the payment plan we had set up for them.
Oh, that's really awesome. That's
the types of things we can do. But obviously, it's much better if you come to us before there's a levy in place, because it's a lot more work, takes a lot more time, and it's harder to get a levy lifted than it is to stop a levy.
And what other options are there for businesses in that situation? Maybe not the levy situation, but just when they're kind of like, when they get to that breaking point where it's like, we're in some trouble here.
Well, you can also try to get them into currently non-collectible. The only problem is with a business, if you get them into currently non-collectible, it basically means they're not viable. They're suffering from a financial hardship, which means they can't pay the bills.
Right.
There's no money left over. So definitely it's either to set up a streamlined installment agreement, which means over time. But again, that's all the type of agreement is based on what the profit of the company is each month. And so it's all based on your ability to pay it back. And so a good option is a partial pay installment agreement. As I said earlier, it is difficult for an ongoing business to get an offer in compromise accepted. Obviously, if you're closed down, then it's not so hard to get an offer in compromise accepted. But probably the best option for an ongoing business is a partial pay installment agreement.
Okay. Walk us through the typical process of resolving a tax issue for a business. How does it work? So when they first come to you, what's the first thing that happens and how does the process go along?
Okay, well, they've got to sign an engagement letter, which gives us the authority to work on their behalf. It's our contract with our client. And they have to sign a power of attorney on the part of the business because they have to give us legal permission to be their representative before the IRS.
Okay.
So if they have a revenue officer, then that power of attorney gets sent in to the revenue officer, and it also gets sent in to the regular IRS division. And then in 2 or 3 weeks' time, we can access all of that business's records back to 1990. And from all the data and information we have, we will prepare for a business. It could be 20, it could be 40, it could be 60 pages that we work up for them because we do go back all the way to 1990. And the client will get a copy of that because we can't always go by what the client tells us. And obviously, we don't want to believe everything the revenue officer tells us. So we have to do our own due diligence and investigation. And then once we see that they're compliant, which means they filed the last 6 years' tax returns, we will send them financial statements. And as I said before, they're confusing, they're complicated to the average individual. And so we may have to go back and forth with them a few times. Revenue officers are going to want a lot of paperwork. They're going to want 6 months of bank statements. They're going to want proof of all the income. They're going to want proof of all the expenses. And so when people do this on their own before they come to me, they think they can handle this on their own. They get this summary of taxpayer contact, which asks for financial information and all of this supporting documentation. And they'll tell me they sent it all in and then they get levied. Well, they didn't send all the information in because it's so confusing, so complicated to those people. They invariably miss something, don't send something in, and then the revenue officer just goes ahead and levy. So that's why they need professional representation, because we know exactly everything that needs to be sent in to the revenue officer.
And what steps can businesses take to avoid tax problems in the first place? Obviously, the easiest one is pay your taxes, but like,
Right.
Is there anything else that businesses can do just to try to make, keep this at bay and not let it happen to them?
Well, that's really the main one. I mean, because if they don't pay their taxes, eventually Uncle Sam's going to catch up with them.
Right.
And then, like I said, it can spill over into their personal assets and their personal income. So that's the danger. Even if you're incorporated, because it's a payroll tax, it can spill over into your personal life and wreak havoc with your personal income and assets.
You said that you have a lot of small businesses and self-employed people and stuff. And do you find that they're just not good at tax planning as a general rule?
Yeah, I think that that's the case. And one of the things that we want to do in the future is, once the case is resolved, to try to offer them ongoing guidance on how to stay out of trouble in the future, and not only in that area, but in other areas, because there's a lot of small businesses that really need help on how to navigate handling that business, because a lot of these small business owners, they don't have a college education. They don't have any business background. And so they need somebody with that expertise in order to guide them through this, because it's a whole different world when you're self-employed. I can't remember for sure the exact statistic, but it's something like 75% or 80% of small businesses don't make $75,000 a year. And there is no health insurance. There is no retirement there. That all comes out of the other profit of the business. So they're not really making 75,000. A wage earner making 75 gets all that given to him by his employer. So that's what people really need to be successful. They need some guidance on how to run the business so that they don't get into this trouble again with the IRS or any other creditor.
Do you find that when you're going through people, small business financials, if they're sort of hemorrhaging money in places, if they're mismanaging funds and things like that, I assume the IRS takes that into consideration when they're thinking about what they're going to allow them to get away with as far as installments?
Well, they may take that into consideration for penalty abatement. But, if you're the owner of the company, you have a fiduciary obligation to know what's going on in that company.
Sure.
So I had a client once, and he was just the money, but he owned the business. And the guy that ran the business wasn't filing returns, wasn't paying the taxes, but the burden was still on him because he died, that gentleman. And so the owner was stuck with the tax liability. And even though he didn't pay it all back, he's still paying a portion of that back because he has a fiduciary obligation to know what's going on with his company. So he got stuck with part of the tax bill anyway.
And would that have gone to his personal too in that scenario because he's responsible
for the payroll tax portion? Yes.
Okay. Wow. Yeah, it's something to consider if you're a small business owner and you've got people working under you and you're like, it's fine, I'm going golfing. Like, make sure you know what's going on in your company, right?
That's exactly right. It's the same thing here with me. I have 14 employees, but ultimately I'm the one who's responsible for what happens with our clientele.
Good things to keep in mind. Well, thanks for tuning in to Resilience and Resolve with Lance Drury. To get in touch with Lance, you can visit lancedrurylaw.com. And of course, don't forget to like and subscribe to the channel to stay up on all things tax law. Lance, always great to hear your info and insight. Thanks for being here.
Thanks, Kevin. Always good to see you.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.